Political attacks, accusations of monopolizing wealth, government scrutiny. He was hated by some and was admired by others. Johann Rupert went through it all. He dominated the country's most profitable industries. He owns the third largest luxury goods company globally. He controls billions through secretive investment firms, which is why he became the richest man on the African continent. There will never be a man quite like Johann Rupert. This is his story. If the person earning minimum wage in South Africa attempted to save every penny they earned, assuming they work 45 hours a week, it would take them more than 3 million years to accumulate Johann Rupert's current net worth. This really puts into perspective just how different the financial realities are between the ultra-wealthy and the person working a 9-to-5. But what's even more fascinating is how they got there. Whether through inheritance, strategic business moves, monopolizing industries, or just being at the right place at the right time. Johann Rupert, for example, inherited a strong foundation but also expanded his empire significantly through various business ventures. But let's take a step back and see where it all began. Johann Peter Rupert was born in Stellenbosch, South Africa, in 1950 into privileged circumstances. Johann's father, Anthony Edward Rupert, was already a wealthy businessman, owning Rembrandt Group, one of the world's largest cigarette manufacturers. The company was also involved in mining, engineering, industrial chemicals, and the luxury brand industry, which propelled Anton to billionaire status. Anton ensured that Johann had the best education that money could buy, since he wanted Johann to follow in his footsteps as a businessman. Johann was enrolled at Stellenbosch University to study economics and company law, but studies wouldn't last long. During his third year, he decided to drop out of university to pursue practical business experience instead of completing his degree. A decision that some of today's billionaires also took, like Bill Gates and Mark Zuckerberg, who dropped out of Harvard to gain real-world experience. Johann Rupert was frustrated by the focus on theoretical learning and felt that the curriculum didn't align with his entrepreneurial aspirations. Growing up with his father's successful business empire led Johann to believe that experience was more valuable than academic qualifications. Johann's father, Anton, had a pragmatic approach to his son's decision to drop out of university. And it seemed like he respected his son's decision, because he himself had little formal education and too valued entrepreneurship and practical experience above all else. Now that he was out of school, he set his sights for America. He knew that if he wants to make it big, then he had to learn from the best, and the United States during the 70s, especially New York, was the global center of banking, investment, and corporate finance. He first started at Chase Manhattan Bank as an investment banker, where he learned various skills like risk management, lending, capital allocation, and also gave him an insight into how major corporations managed their money. He later worked at Lazard Frères, where he further developed his skills, enhanced his knowledge, and networked with high-profile investors who later would help him fund many of his startups. After working at Chase Manhattan Bank and Lazard Frères, Johann Rupert returned to South Africa in 1979 with a vision, and his vision was to create his own financial empire, rather than working for his father's company. This decision to focus on the financial sector came from his various experiences in the investment banking and corporate finance sectors, and it inspired him to create a South African financial institution that operated like the global banks he had worked for. During his analysis of South Africa's banks, he discovered a key gap in the finance sector. Most of South Africa's banks was dominated by traditional commercial banks that focused on loans and savings, not investment banking, and he would use this to his advantage. Another issue was that there was limited access to capital for entrepreneurs and businesses. So many startups struggled to get funding or financial advisory services, and this was another problem which Rupert saw an opportunity in. Wealthy individuals and corporations also needed better asset management and investment services. So with all of these issues, Rupert created a Rand Merchant Bank RMB to fill this gap. RMB focused on private equity, asset management, and structured finance, attracting high net worth clients and investors. This strategic move positioned RMB as a game-changer in the South African financial sector and paved the way for its eventual merger into First Rand Group. By the mid-1980s, RMB needed to scale to compete with larger financial institutions. The company merged with Rand Consolidated Investments, which was founded by Paul Harris and G.T. Ferreira. Their company also had a strong focus on investment banking and financial services, which made it a perfect match for RMB. In 1998, RMB merged with First National Bank, FNB, and Southern Life to form First Rand Group, one of South Africa's largest financial institutions today. Going back to Johann's father, Anton was still in control of his tobacco and industrial investment company, but here's the thing. He was nearly 70 years old and needed a successor. He believed it was the right time for his son to take the reins after proving himself as a capable businessman. So in 1984, Johann Rupert joined Rembrandt and officially took over leadership, becoming the CEO. Anton Rupert stepped away from the day-to-day operations of the company, but was still involved in the business as a mentor for his son. During this time, Johann Rupert had also been eyeing up other sectors in the global market, and one of those sectors was the luxury sector. Johann Rupert saw an opportunity in the global luxury industry, especially in Europe. This is what led to the founding of Richemont in Switzerland as a holding company for luxury goods. The 1980s and 1990s were a transformational period for the luxury industry, and before this, luxury brands were mostly family-owned, serving elite, high-net-worth clients. But by the late 20th century, the industry changed due to corporatization, globalization, and shifting consumer trends. Many luxury brands merged to form bigger groups, like when Bernard Arnault merged Louis Vuitton and Moet Hennessy into one corporation, LVMH. Other corporate players followed suit, buying up high-end brands to create multi-brand luxury groups, a trend Johann Rupert later followed with Richemont. Coming back to Rupert, his main goal initially was to separate the luxury brands from his father's company, Rembrandt Group, and create a dedicated luxury goods company. He spun off the luxury assets from Rembrandt Group, which were Cartier, Dunhill, Montblanc, and Alfred Dunhill, and transferred them to Richemont. From the 1990s to the early 2000s, Richemont aggressively expanded by acquiring world-famous luxury brands, particularly in watches and jewelry. Richemont became one of the biggest luxury groups in the world, competing with LVMH, Louis Vuitton, and Kering, Gucci Group. What made Richemont unique was Johann Rupert's ability to identify and acquire brands that exuded exclusivity, craftsmanship, and timeless appeal. Cartier, known as the Jeweler of Kings, became the crown jewel of Richemont's portfolio. Johann understood that true luxury isn't about products. It's about storytelling, legacy, and creating desire. But as Richemont rose to global prominence, Johann Rupert knew it couldn't continue operating like a patchwork of luxury brands. It was time for a bold move, a radical restructuring that would change everything. One of Richemont's biggest assets was its stake in British American Tobacco, BAT, which it had acquired through past mergers and investments. By the early 2000s, Richemont had become a strange mix. On the one side, it controlled luxury brands like Cartier, Montblanc, and Dunhill, and on the other, it was one of the biggest shareholders in a tobacco company, BAT. This created a strategic dilemma. Richemont was increasingly focused on luxury, but a large portion of its value was tied to BAT, which had nothing to do with the luxury business. By 2008, Johann Rupert decided to separate Richemont's luxury business from its investment holdings. This was done through a major restructuring which resulted in Richemont being split into two entities: Richemont Luxury Business, which focused purely on high-end brands like Cartier and Montblanc, and Reinet Investments, which held the BAT stake and other assets. Reinet was set up in Luxembourg, a jurisdiction known for investment-friendly tax policies, and Johann took full advantage of it. The main asset of Reinet was Richemont's 19.5% stake in BAT, which was worth billions of dollars. Instead of selling the BAT shares, which would have triggered massive capital gains taxes, They were transferred into Reinet, where they could be managed more efficiently. Reinet was structured as an investment company, allowing it to reinvest proceeds from BAT dividends into new ventures. This was a smart move because if Richemont had sold its BAT stake directly, it would have faced huge capital gains taxes in Switzerland and other jurisdictions. By moving it to Luxembourg, Reinet could avoid immediate taxation and reinvest profits tax efficiently. Another issue was that many luxury investors weren't interested in a tobacco company, and this move allowed them to invest in Richemont without exposure to the tobacco industry. Meanwhile, investors who wanted the BAT stake could buy into Reinet. Unlike Richemont, which had to focus on luxury, Reinet had full freedom to invest in anything like private equity, hedge funds, real estate, startups, etc., etc. Johann Rupert didn't just want to run a business, he wanted to build a legacy. Reinet became a vehicle for his family's long-term wealth, diversifying beyond luxury goods. Success, however, came with its fair share of challenges. Critics questioned his immense wealth in a country struggling with inequality, particularly from Julius Malema, the leader of the Economic Freedom Fighters, EFF, and other populist figures in South Africa. Malema and others accused Rupert of being part of a so-called Stellenbosch Mafia, a term used to describe a supposed elite group of wealthy white businessmen from Stellenbosch who allegedly control South Africa's economy and politics. Rupert, who was born in Stellenbosch, is often portrayed as one of the most powerful figures in this alleged network. However, Rupert has repeatedly denied the existence of any Stellenbosch Mafia, saying it is a myth and a political tool used by populists. Malema, in multiple occasions, accused Rupert of controlling the economy and influencing politicians behind the scenes to protect white capital. He has blamed Rupert for economic inequality that took place in South Africa, suggesting that he and other wealthy individuals benefited from apartheid-era privileges, while black South Africans remained disadvantaged. The EFF has also targeted Rupert personally, even protesting outside Remgro's offices, demanding radical economic reforms, including the return of land. Rupert has dismissed Malema's accusations, calling him a political opportunist who uses racial rhetoric to divide people. In interviews, Rupert has claimed he does not fund political parties or interfere in governance, as Malema alleges. Johann Rupert has also pointed out that Malema himself is wealthy, with a combined net worth of $5 million, or about 80 million rand, and questioned where his funding comes from. The Rupert family's businesses, particularly Remgro and Richemont, faced several challenges. South Africa during the 80s and 90s faced harsh economic sanctions and international isolation due to apartheid. Anton and Johann Rupert tried to distance themselves as much as possible from the apartheid government, promoting a business-friendly transition to democracy. Johann Rupert later admitted that his father supported reform and was friendly with Nelson Mandela, advocating for a peaceful end to apartheid. Johann Rupert strategically expanded Richemont's international operations, reducing their reliance on the South African market. By investing abroad, Rupert protected his businesses from sanctions and positioned them for the post-apartheid economy. Globally, Richemont faced the test of economic recessions, but Johann's strategic foresight ensured that the company weathered these storms, emerging stronger with each challenge. Despite his business successes, Johann Rupert's story isn't just about wealth, it's about giving back to the community. He has been involved in philanthropy across various sectors, including education, conservation, entrepreneurship, and social development. He donated 1 billion rand or $54 million to Stellenbosch University in 2022 to provide free education for students from disadvantaged backgrounds. He was also a founding donor to the Mandela Rhodes Foundation, which provides scholarships for African students, but this is only a very small part of his philanthropic work. Unlike some billionaires, Rupert prefers low-key philanthropy, avoiding public announcements unless necessary. He once said, "I don't do philanthropy for PR. I do it because it is the right thing to do." Johann Rupert has also prioritized passing down the values of excellence and stewardship to the next generation, ensuring that his legacy will endure. Johann Rupert's legacy isn't just defined by the global empire he built. It's also reflected in the next generation he's quietly shaped. His daughters, Hannelie Rupert and Caroline Rupert, each followed their own paths. Hannelie blended entrepreneurship and culture by founding Merchants on Long. Caroline, while more private, remains involved in the family's philanthropic causes, upholding the values they were all raised with. But the future of the Rupert Empire now rests on Anton Rupert Jr., Johann's only son and designated successor. Having served as a non-executive director at both Richemont and Remgro, Anton Jr. is steadily stepping into his role, mentored from childhood and now positioned to lead the family's multi-billion-dollar business legacy into the future. From a small town in South Africa to the summit of global influence, Johann Rupert's story is about more than luxury, more than power. It's a legacy, shaped over generations, carried forward by family, and built to last.